Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 21st, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar continues to advance. We've had a corrective move down towards the VantagePoint long-term crossover pivot area, which was down around 91.88. We bounced off of that and we've extended higher on rising US yields. The 10-year note now well over 3%. However, I'm not sure that's going to be enough to carry the dollar through to any full extent as we approach a major resistance zone at 94.30. The dollar has had a very strong rally over the last several weeks, but we also have the FOMC this week, which could I suspect the Fed will throw water on the dollar rally, not gasoline on this particular fire. So we'll see how this one plays out. But right now we have a couple of key downside pivot areas we want to identify: 93.38, 93.05, and the key VantagePoint long-term pivot area at 92.41. Now, when we look at the additional indicators here from VantagePoint, they are moving into a heavily overbought territory, but they're coming off a corrective move. We can see that the dollar index, the RSI on the dollar index, came down to the 50 level, failed at the 50 level on the predicted RSI, and then it started to advance higher yet again. So we'll see how this one plays out by midweek, but the FOMC minutes will play a very big part in what happens with the dollar. That will also directly affect gold. Now, gold, we've lost a major level at 1302. I anticipate we will come back up and retest that level. The key VantagePoint levels now on the upside, 1300 through 1315.97. But if we can retake and close above 1305, that will put additional downward pressure on the dollar. This is the intermarket correlation we want to watch very, very closely. If gold continues to extend lower, the dollar rally should stay in place. Now, if that dollar rally stays in place, that's going to have a negative effect on the equity markets. However, you can see that this last week we have held on the key VantagePoint medium-term pivot area, 27.11.14. We've bounced off of the key VantagePoint area 4 days in a row. This is not a coincidence, guys. We have to make sure we can realize that. But when we look at the medium term crossing the long-term predicted difference right here, it's warning that the S&P 500 could be getting ready for a bigger move to the downside. Now, that will only happen if the dollar strengthens further. So we want to keep, if you equity traders are watching this, you want to keep a very, very close eye on that dollar index. Now, oil, basically, when we're talking about oil compared to equity markets, oil has topped out the week just above $72 per barrel, but it's still quite bullish in my respectful opinion. We do need to work off some of this overbought condition. The key downside levels there, we come all the way down to 60.89. As long as we're holding above 69.81, excuse me, then we should extend higher. Now, when we go into our main trading this week, again, we've got a little bit of a choppy week with the FOMC minutes. That's the main one to watch. The Euro-US putting in what appears to be a potential double bottom down in this lower 117 range. Predicted differences are starting to rise, but the RSI is still pointing lower. So we really want to keep an eye on gold here, guys. Gold and the euro, there's about a 95% correlation. If gold goes lower, it takes the euro down with it, or vice versa. So keep a very close eye on that. But right now, still carries a slightly bearish tone. But as we start moving towards Wednesday, when we're going to get those FOMC minutes, that will be a determining factor for the euro. So keep an eye on that very closely. But another leading indicator for the euro, of course, is the US Swiss franc currency. We have not, despite the strength in the dollar index, these two, the US Swiss franc and the dollar index, have about a 98% correlation. And right now we are unable to basically break through 1.00554. We're coming back, closing very close to that key VantagePoint pivot area at 99.42. But if we break through 99.42, then basically that's probably going to be the trigger that will send the euro higher and this particular pair lower, and of course the dollar index lower. So we want to watch that very closely. When we look at the individual crossovers from VantagePoint, the short term is down with the neural index. When we look at the medium term crossover, it too is moving lower. The long-term crossover, a lot of activity coming in right around this 99.96 area, and we are closing below it. So still quite bearish, quite a bearish setup for this particular pair. Now, as we look at the pound dollar coming in for next week, we have visual heavy support here, quadruple bottom coming in around 134.50, but we're closing at 134.60 right on this particular level. So if we can hold this level, the pound dollar should be getting ready to recover very soon in the next week or two. But right now, we really want to watch this 134.50 area very closely. Where we close on this on Monday and Tuesday of next week will set the tone for the rest of the week. Now remember, it's a holiday short week in Canada with Victoria Day on Monday, so the markets will be a little bit thin on Monday. Watch this one closer, and watch crude oil even closer on Tuesday of next week. But again, the predicted differences are rising. We've got a predicted MACD crossover, so this could be it for the pound dollar. Maybe one more push to the downside, then a reversal. But again, we must clear through this 135.26 area so we can target the key VantagePoint level at 136.29. And if we break above that, the pressure will officially then be off the downside. Pound yen coming into some very stiff resistance. You can see price action pushing through the resistance at 110.50, which has contained the market most of the week. We've had a big move up, but there's still a pretty strong correlation here to the equity market. So if the equity markets do start to move lower, that could drag this pair down with it. But right now, we are in an overbought condition, but it's still holding firm above these key VantagePoint levels, 110.55, 110.19, and 109.59. Now, if we get a bearish, or if we get a dovish Fed minutes, then dollar yen is going to retreat very quickly towards 109.59, and it wouldn't surprise me if we start moving towards that prior to Wednesday trade. But again, we can reassess, but I would anticipate at least a test of the 109.59 area this coming week. Now, as we move into our three main commodity currencies, US CAD, Aussie US, and New Zealand US, what we have to be very, very cautious of here with Canada is that it's very susceptible to movements in oil. If oil can continue to move higher, the US CAD will turn and move lower. But the economic data out of Canada was very poor again on Friday. Not a whole lot of inflation here, guys. I wouldn't expect another rate hike from the Bank of Canada anytime soon, based around the core retail sales and the core CPI numbers. Neither one were good. It's hard to spin it, but a lot of the economic data is just noise. I would be far more concerned with whether oil is going to retreat or whether it's going to advance. If oil advances, the Canadian dollar will strengthen with it. That will put downward pressure. Right now, the key level to watch for next week, 128.26, 128.29, and 128.43. We've had a bullish close of 128.80, but remember, it's a holiday long weekend in Canada, so markets are thin, and we got some relatively poor economic data, which pushed it up above 129 on Friday, but even then it did not hold above there. It came right back down. We've got very, very identifiable resistance here. The swing high from basically about 2 weeks ago, that's coming in around the 129.97. But currently this high from last week, that's the one, 129.24, is containing any rally, at least for now. So, but I would be more focused on this particular pair come Tuesday and bypass this pair altogether on Monday, because again, the Canadian banks are closed. Okay. Now, as we move into our additional two commodity currencies, when we look at Aussie US and New Zealand US, Aussie right now is trapped between, we've got good support sitting down here. That's coming in at or about the 74.47 area. We've got what appears to be a double bottom here. So we are making some higher lows, no question about it. Unfortunately, we're also getting all tangled up in the VantagePoint long-term crossover pivot area, which is coming in at 75.32. We've managed to push slightly above it, and each time we did it, sold off. So For next week, we're going to be watching these two levels very closely, but the Aussie has a very high correlation to gold and equities. If the S&P 500 moves lower, then Aussie will follow. So will the New Zealand. So will the CAD. So be careful of that. So next week, watch your low areas here, but keep a very close eye. If we can break through, we've had a decent close at 75.07. If we can close above 75.32, then the Aussie can run, maybe back up towards the 77 area. That's left to be seen. But if the stocks move lower, then Aussie will follow, as will New Zealand. But New Zealand also putting what appears to be an additional bottom in here also. When I click on this particular bar here, oh, excuse me, we're just going to move this over a little bit here. Now again, if we can hold above this particular low area here, excuse me, let me just drag this over, 68.51, then if we hold above 68.51, the Aussie has a real shot of moving back towards 68.89, the key VantagePoint pivot area. But unless we can break above 69.89, it's the move higher is only corrective in nature. So this will be determined by gold. It will be determined by oil, but you can see how the market is unable to get to the key VantagePoint long-term pivot area because it keeps bouncing off of this number, the medium-term pivot area at 69.21. We've bounced against it at least 7 or 8 times just in the last 2 weeks, each time a selling opportunity. So if we can break above it, it represents a buying opportunity. But if we can't, then we would continue with shorts. So again, we've got a holiday short week next week. It's going to be a little choppy with the Fed minutes, but still some very good trading opportunities if we know our levels. So with that said, this is the Forex Weekly Outlook for the week of May the 21st, 2018.